If you missed the past week's big tech earning reports, we're breaking them down right now. Netflix, Tesla, IBM, and Intel all just reported this week, and what happens next could depend on today's inflation data. So far, around 90 of the S&P 500 companies have reported this week, and these big names set the tone for how the market trades setting into the CPI number. Let's break down what happened and what we're watching next. First up, we have Netflix. They reported $11.51 billion in revenue, basically on target, but EPS came in light at $5.87 versus $6.90, which was expected. The reason is a surprise tax charge in Brazil that cut their operating margin from 31% to 28%. Without that one-time hit, they would have beaten forecast. Subscriber growth and ad revenue are still solid, but Wall Street punished the stock for the miss. Then we have Tesla. They pulled in $28 billion in revenue, beating the $26 billion estimate, but EPS came in at 50 cents versus 54 cents expected. Margins are still under pressure with operating margins down to 5.8%. Elon gave very few updates on robotaxi and full self-driving. Still, $6 billion in free cash flow and $41 billion in reserves keep Tesla in great shape financially. Investors like the revenue beat, but they're going to be waiting for a catalyst. Then we have IBM. IBM quietly crushed it. Revenue hit $16.3 billion, beating expectations, and earnings per share came in at $2.65, up 21 cents from estimates. The hybrid cloud and AI consulting business is driving growth, and shares are now up 20% year over year. IBM hasn't looked this consistent in years, and Wall Street is noticing. And lastly, we have Intel. They surprised to the upside. Revenue came in at $15.9 billion versus $15.4 billion expected, and earnings per share was 54 cents versus a 48-cent estimate. Solid double beat for them. The big story is that their foundry business posted its first sequential growth in over a year, showing progress in their turnaround plan. But guidance for the next quarter was cautious, signaling that while AI demand is strong, PC and server markets remain soft. Intel shares jumped after hours as investors focused on the comeback narrative. Also had Texas Instruments report 14% year-over-year growth, but guiding conservatively. AT&T and GM both slightly missed, though GM popped 15% on tariff relief headlines. All eyes are on this morning's CPI report. Economists expect headline inflation to come in around 2.9% year-over-year and core CPI near 3.3%, both slightly cooler than last month. If inflation shows signs of easing, the market could rally on renewed Fed rate cut hopes. But if it comes in hot, we're going to want to expect volatility, especially with Apple, Amazon, and Microsoft all reporting next week. If you found this video helpful, hit like, follow, and share so you don't miss updates like this and get daily real-world financial content like this in your feed every single day. It's not financial advice. Always do your own research before investing.